risk refounder of Second Skies. So I have another price action video for you here I want to talk about. This video is on rejection zones, being able to detect them, understand them, how to use them for opportunities to enter and exit the market, and also when not to be involved in the market, where not to be involved in the market, particularly when it comes to trends. Before I get into today's video, I just want to make a brief announcement. We have launched our Pro Forex online trading course. You can see it on our website, secondskiesforex.com. If you're looking for advanced chart reading skills, if you're looking for simple price action techniques, if you're looking for the ability to spot key reversals, learn proprietary strategies, get access to quantitative data that's never been published before on pivot points, also follow up free trade signals and mentoring with me, then the Pro Forex online course is definitely the way to do it. I'll be talking more about that at the end of this course here, but for those of you that are looking for a way to accelerate your learning curve, to advance your education and your trading and give you clear, simple techniques to trade the market, the online course is the way to do it. So let's talk about rejection zones. This is a basic concept which is actually part of the advanced concepts and strategies and tactics we use in the course. Rejection zones is the ability to detect, or is a communication in the market saying, hey, price is not at an equilibrium here. There's really no perceived value. There's either overvalue or undervalue, but there's no agreement upon value between the buyers and sellers. If there is agreement upon value between the buyers and sellers, we would be in a range environment. When the market is trending, there is no agreed upon value because the value keeps getting perceived to be higher and higher and higher. That's what carries the market up. Now, one of the big questions that traders have is how to trade rejection zones. How to get into a trend, how to find role reversal levels, and one of the key questions I also hear about trends is, hey, is this thing going to end? When do I get in? When do I get out? These are all critical, important questions, and your ability to understand price action, particularly detect rejection zones, will give you a clear edge on when not to get into a trend and where you can get into a trend based upon just price action tactics here. So we're going to talk about the euro pound. It had climbed for a long period of time here from 85 up to 93. Once it broke above the EMA, it just treated it as support and then launched forward. Now look at these previous two pullbacks we have here. This pullback right here was roughly 120 pips. Simple, took 3 days. The next one also took 3 days, and it was roughly 100 pips. So somewhere between 120 to 100 pips is natural for a pullback. Now take a look at this last one here. We skyrocket up, and we have one candle which has a 100-point rejection on it. The rejection area here, or the pullback here, is powerful in one candle is what normally took 3. That generally suggests that there was more force, more clarity and communication in the market, that this is a more legitimate pullback than the others. It's not corrective, it's impulsive. So at many points in time, our Second Skies traders were adding on positions long in the euro pound as this trend was continuing. For those of you getting trade signals, you were getting the locations to get in and out of this trend, and we were making money on all the way up. But we didn't add in any new positions once we saw this rejection zone. Why is that? Well, this rejection zone here was an area that the market was saying, look, this right here is an overvalued area for the euro pound, at least at this point in time. There was competition to sell the euro pound there. If there was no competition, we'd have several candles here. That means that both buyers and sellers would be agreeing that this is an acceptable area for the euro pound to be at. But that wasn't the case. There was competition, and we haven't been able to see price ever re-enter this entire rejection region. So if you were looking for buying opportunities on the euro pound, this whole region would be considered a hands-off region for adding on positions. We wouldn't add any positions here because the market was rejecting that, saying that this is not an area to be going long in the position. On top of it, if you were looking to say, continually buy, well then you really had an opportunity. You really only had 2 options in this case. You could buy on a break. Nothing in between here because we've communicated this is a rejection zone. You could buy on a break, but only if we have a role reversal. What is a role reversal? It's when the market treats a particular level as either resistance as support, and then that reverses. So if something was resistance, the market via dollars, via actual live money, now considers that support. Case in point, nice little climb up here, double rejection at 90.81, bounces back, climbs up, and look what happens here. we also have two candles again landing right on the same rejection zone. How much difference was in the lows? 97.6 on this candle, 90.80. 4 pips difference on a daily chart. That communicates that this was a clear role reversal, giving us two opportunities to get back into it. Since then, the market has launched long, and it hasn't even been able to actually close inside this entire region. So now this is clearly a role reversal level, which was a clear buying opportunity over 2 days to get long back on the euro pound. So your ability to spot rejection zones, either in the ends of trends or in role reversals areas, are going to give you key opportunities to either protect profits, avoid making mistakes and getting in trend when you do not want to be involved in it, and finding the key pullback areas to get into these markets. So as mentioned before, we just launched our ProForex online course. It's a tremendous opportunity to get 3 proprietary systems. You also get 3 trading strategies to go with it, clear entry and exit rules and parameters, risk management's all included in that. You get follow-up private mentoring with me. You also get 2 free months of the Cloud9 signals. So it's just, it's a tremendous opportunity to learn how to find absolutely key reversals, how to get advanced charting skills, find these tremendous trading opportunities in the market, also get access to 10 years of quantitative proprietary data and pivot points. I mean, there's just a ton of information on it. So for those of you that are interested in the ProForex online course, you can check us out at secondskiesforex.com. You can also email me info@2ndskies.com. I also offer private mentoring one-on-one if you're looking to take your trading to the next level and really accelerate your learning curve. We also have the Cloud9 signals for those of you that are looking for a signal service. And for those of you that sign up for the online course before October 15th, in the follow-up email, once you order it, say, hey, I'm one of your YouTube video users. I'm subscribed to your videos, and I'll send you a $25 discount as well with the free Cloud9 signals. In essence, you're only paying $25 for the course, which is just a tremendous deal, only till October 15th, and that's it. So for those of you who have any further questions, again, email me info@2ndskies.com. I look forward to hearing from you. And until then, good hunting, everyone.